The primary purpose of this podcast is to educate and inform. The views, information, or opinions expressed by hosts or guests are their own. Neither the show nor any of its content should be construed as investment advice or as a recommendation to buy or sell any particular security. Security-specific information shared on this podcast should not be relied upon as a basis for your own investment decisions. Be sure to do your own research. The podcast hosts and participants may have a position in the securities mentioned personally through sub-accounts and/or through separate funds and may change their holdings at any time.
Welcome, everyone, to a new episode of This Week in Intelligent Investing. Great to have you with us again. Great to have my co-host, Elliot Turner, and a special guest today. A real pleasure to have with us Eric Markowitz, partner and director of research at Nightview Capital, which he joined in 2016. Eric directs all high-level research at the firm and participates actively in the day-to-day decision-making of the Nightview Fund. Eric is also the author of The Nightcrawler, a terrific idea-driven weekly newsletter on investing, business, and technology. And what's also interesting, and we'll delve into this a little bit, is Eric began his career as an investigative journalist with bylines in Inc., The New Yorker, GQ, and Newsweek magazines. He's also a recipient of a Best in Business award from the Society for Advancing Business Editing and Writing. He graduated cum laude from NYU with a BA in journalism and a concentration in business. Eric, so great to have you with us. I think we're going to cover a range of topics, but why don't we start a little bit with your path in investing? And I guess it kind of started in journalism before you went on to be an investor, but I know that there's a connection between the two. So over to you to kind of set the stage for us.
Yeah, thank you. I'm a fan of your show, and I think I've listened to so many episodes. And recently, you've had some of my friends on, so it's very cool to be on and talk with you guys. Yeah, my background, I really had no idea that I'd be an investor. If you'd asked me when I was, 15 or 16, what do you want to do when you grow up? I would almost certainly say something like, I want to be a writer. And so I decided the only way to actually get paid as a writer was to become a reporter. I didn't want to be the type of writer that, depended on, just like odd jobs and, making my way through the world without any sort of like real career. And so reporting actually provided a way to professionally get paid to write. I went to school to study both business and journalism, and really fell in love with reporting while I was at college. I was fortunate to have some really great professors, some people who maybe some of your listeners have read, writers like James McBride, who's written some great books and really kind of learned the craft of writing. And after graduating from college, you said that I started my career as an investigative reporter. That's sort of true. I really started my career as a fact checker, which is kind of the lowest rung on a magazine masthead. And so my job day to day was to take the copy from reporters at the magazine and literally word by word check if what they had written was correct. And this involved calling up the sources that they spoke with and said, hey, Elliot or John spoke with you for a story. Did you actually say this? And the source would have to say either yes or no. Most of the time, the source would say, yeah, that's you got it right. But I think there were a number of times where the source would say, well, that's not exactly how I said it. And so I'm bringing all this up is because, writing is really sort of only one part of journalism. The reporting and the fact checking is super essential to a finished product of a really compelling piece of journalism. As I'm sure both you guys know, the art of fact checking is kind of, sadly dying, and there's just not really a business model to support that type of diligent, in-depth approach to journalism. But for me, that's kind of how I cut my teeth. And so over time, I got the opportunity to write longer stories, do my own reporting, travel quite a bit for the work that I was doing, and it was for me. And I think back on this time very fondly. It was kind of a way to learn about the world. There's very, very few jobs where you're paid to learn, Being a reporter is one of them. And for me, what I'm realizing after 10 years as an investor is if you are doing your job correctly, at least in my opinion, as an investor, you're effectively getting paid to learn. As a reporter, you're getting paid to learn and express what you're learning through stories. As an investor, you're getting paid to learn and express it through investment ideas. So I've always just kind of had I don't know, just a fundamental curiosity about how the world works, about how business functions, about how technology affects our lives, about how it improves our lives, about just like really getting into how these systems work and how they shape our culture and society. And I definitely didn't expect to end up as an investor. I got a phone call in mid 2016 to say, hey, do you want to come take a meeting with this hedge fund manager? And on a flyer, I said yes. And then I basically decided I was going to pivot careers. And here we are 10 years later.
Yeah, so fascinating story. Journalism obviously has changed a ton over the years, as has investing to an extent. And I guess both the question is with AI, what's coming. I'd love it if you could, draw some parallels between, the research you do as an investigative journalist and as an investor, and how you actually build conviction, especially now that information is so widely available. How do you generate that, special insight?
Yeah, I think that's the aspiration. I think that's what we're all trying to do if we are managing a portfolio of, fairly concentrated portfolio. Going back to my time as a reporter, one of the things that I really admired about the reporters who did it well was they really didn't take any shortcuts to the research of the material. They would go personally to the archives. They would go speak with people in person. They would do the actual shoe leather reporting of just knocking on doors, talking to people, and not relying on second or third hand reports or accounts or observations, just doing the diligence themselves. And I think that the risk as I see it with AI is it is so powerful. And Elliot and I were on a call earlier today talking about this, which is it makes it so easy to access existing sets of information, data sets of information, that you can very credibly take shortcuts to access information and internalize it, learn about it. But it short circuits this process, the sort of the slow, messy process of discovery of information. And I think, as investors, we can all appreciate there's just a lot of drudgery and time spent maybe going through a 10K or 10Q, or a lot of wasted time, you may think, going and reading through earnings calls and transcripts of companies that maybe you invest in, maybe you don't. But there's just a lot of time spent on researching material that may or may not be material. I think that there's actually a lot of value in that inefficiency, in the time that you spend reading things and going down rabbit holes that aren't necessarily efficient use of your time, but could create some really like serendipitous moments where you're not expecting to learn something, but suddenly buried somewhere in a transcript or in a 10K, you have kind of an aha moment where you think, oh, that's really interesting. Let me start, pulling that thread. When you contrast that with how we're using AI and how I use it, it's very direct. I mean, you ask it for information and it just gives you the information. So it condenses the period of time it takes to research something. But I think, and I'm still going through this, and I'm curious to get both of your thoughts on this too, because I don't really have a solid handle on how this will play out over time. But what I think happens is there's a little bit of a false degree of comfort in you query the LLM for information, it gives it to you, and then maybe you just kind of move about your day and move on. And so that space of like what Jeff Bezos would call wandering, I think is really important, and it's an art form that I fear could be lost if we spend too much of our research process within AI. So I don't have a solid answer here. All I know is that personally, I find that I am using it extensively as part of my research process, but I am a little bit fearful to use it too much. And so I'm kind of doubling down on focusing on, in-person research trips, conversations, and doing the maybe somewhat messy and slow process of primary research, because I do think that there will be long-term recurring value of some of this slow, maybe boring work. But that's just a theory. And Elliot or John, I'm very curious to get your take on this.
Well, before I have a take, I'd love to hear one thing from you in particular, having started in fact checking, right? Because I've queried AI for things numerous times, but I'm a tinkerer and I like playing with it. And I've asked it questions I know the answer to point blank at times, and I've found some things to be verifiably untrue. So, like, how do you approach it from do you approach it from the perspective of a fact finder, or do you approach it for a fact checker? I mean, or do you approach it from the perspective of, I'm going to synthesize all this and I'll still independently try to find everything, and it's just part of my mosaic of research.
I mean, I wish I could say that I fact check everything that ChatGPT tells me, but the truth is that no, I kind of accept a lot of it as just relatively close to the truth. But I think you're pointing out, I think, a very good issue, or a very, I'd say, important issue, which is, I think we all know intuitively that a lot of the stuff that's on the internet is just not accurate, right? And so all of these data sets that have been fed into LLMs, they haven't been independently fact checked by some rigorous process. So what are we really pulling out from ChatGPT or Claude or Gemini? I mean, we're pulling out kind of a body of data that hasn't actually been verified. And so I think that even if it looks really, really compelling, I think that you should always approach it with some sort of skepticism at the very least, especially if it's informing an important decision that you're making. Um, I did a little bit of writing for the New Yorker, and the New Yorker is like incredibly famous for its fact checking process. And whenever I wrote an article for the New Yorker, I would be absolutely terrified to get the email from my fact checker saying, "Okay, I'm about to start fact checking your piece." And I think that like that experience to me reminds me that I think we should apply a little bit of that mindset to any information that we get. There's a expression in journalism that I love, which is I don't know who said it, but if your mother says she loves you, check it out. And it sticks with me because it's like, even if what you're pulling off of ChatGPT or any of these LLMs sounds correct, it sounds smart, I think going to just source data, source information, will always have a ton of residual value, because you're just, it's like you just have to keep kind of digging into where the initial piece of data came from to get a fully informed view on something. And I think there's a great degree of efficiency and promise that these systems hold. But again, outsourcing everything, all of your process to it, I think we haven't really yet grappled with the risks of doing it. And I think increasingly, as I'm sure you're seeing in your portfolio companies, as companies are increasingly using AI tools to make processes and systems more efficient, and they're taking humans out of like an incredible amount of processes, which is potentially incredible from a productivity standpoint. But I think that there's going to be over time a realization that some systems can't be replaced by a robot. And I don't know, to use like a silly example, but it's just an easy one, something like a fast food restaurant. I think we're very close to being able to replace some of the front of house workers with just a machine, some sort of AI system, and maybe even robotics. And in the short term, I think that probably will create a more profitable company. by just reducing human labor. I worry that over the long term, though, that maybe it actually increases the amount of fragility that the company has, because certain systems that rely on just human interpersonal relationships are actually really critical to the long-term resiliency of companies. I think this is like a very delicate and kind of fascinating balance that everyone is trying to figure out. And it's like very early stages. I think no matter what job you have, AI will at some point have some sort of impact on you. I think I also agree with the idea, and I'm not the first to say this, but that AI is very much like electricity. It's going to be embedded in so many systems and processes. It's just, I think the responsible thing as an investor or as an operator is to really question what is the long-term benefit or risk of using this? Because I think if I look back at some of the most kind of resilient businesses, they not only use new technologies, but they actually also resist using new technologies. And I think that's like the really careful, delicate balance that we've all got to figure out.
Yeah, that's a great point, and would love to get into the research you're doing at the moment into resilient businesses. My perspective on this is just that informational and even analytical advantages have lost even more due to AI. So maybe it really is about that ultimate behavioral advantage that people can still have in the market, and that has a lot to do with your temperament, and maybe also a particular lens that one brings to the information and analysis that's out there, that's plentiful. But if you have a kind of a differentiated lens to put it through, that needs to be right as well. Maybe that's where some of that advantage will come from in the future.
Yeah, I think that there's always going to be some behavioral advantages if you can. I think investing, at least as I've seen it, and the investors who I admire most are not necessarily actually the smartest people in the room, but they have the highest degree of conviction, and they have really the heart for it, not necessarily the brains. So I think that to be really, really successful long term as an investor, what I have just observed from the people who have done it is very often just doing less is a core theme that kind of keeps coming up from just talking to people who have maybe had really successful 30-40 year careers. Just an incredible amount of simplicity to the process. And I think also just behaviorally, how one spends their time. I mean, I think if you spend your time kind of constantly looking at sort of short-term news, prices, just what's ephemeral, I'm not sure that really creates a fertile breeding ground for long-term success. So increasingly, I just find myself trying to. I had this like kind of observation somewhat recently, kind of embarrassingly, that I used to think investing was like a desk job. And, if I would go to the doctor and they'd say, "Oh, what do you do for a living?" I say, "Oh, I just have an office job." And I've kind of had this realization that investing is at its heart, it's a travel job. It's like going around and talking to people and having conversations and seeing things and experiencing things. And it's very much a profession that I think benefits from using all five senses. And that's not really talked about very often. It's something that I've kind of just come to on my own, realizing that, oh, I'm actually enjoying it more when I'm out and doing field research, and two, that my not necessarily that my insights are better, but I just have a better emotional throttle on when markets inevitably go haywire. I just have more a sense of calm from just being out and having had some experiences talking to customers or suppliers or executives in a C-suite, and just having a better handle on what's actually going on the ground versus what's happening kind of in our internet ecosystem, or what's happening on a Bloomberg screen. And I think in order to just maintain that behavioral edge, this is just sort of a personal observation that you just, I think, have to step away from it. You have to step away from the day to day noise of what's happening presently. And I think, especially coming from my background in media, and frankly, one of the reasons I left was there was an increasing fixation on just short term news. And so when I started my career, it was pre, '08. There was still a business model built around doing long form, deep investigative work, and really having the opportunity to do print format type of journalism. But I think that the media industry actually mirrors what's happening in investing quite well, which is the media industry really shifted to a 24/7 mindset. And so all of the sort of long-term, long-form thinking articles got pushed to the back burner. And it just became an environment of just clickbaity, SEO driven, what's trending right now on Google, and writing about that. And I didn't really want to do that. I just felt like there wasn't much value there. And I see the same dynamic in investing. There's just a lot of momentum driven investing. It's a lot of kind of herd mentality. It's always been the case, but I would say it's probably more now than it was 50 years ago, just given the ubiquity of smartphones and social media. I think like we all saw in 2020, just this incredible just trading frenzy, people, just trading stocks. And I think that this makes it in one sense harder. But I actually think over the long term, it creates a really fertile ground for, if you are willing to kind of think a little bit more long term and just go off of, just take a break from news and short term just movements, that that you can get a real edge by just having that perspective. And it's not something that I have completely mastered. It's something that it's almost like meditation. It's more of a practice than anything. It's like just almost every day, just reminding myself that, hey, forget what's happening today. Like, let's just go back to the primary work of research, talk to people, get out of the house. So I'll pause there. But I think, for me, I'd be curious also to get your thoughts too. Like, I just think it's such an maybe an obvious observation that I had way too late in my career, but like that this wasn't necessarily the desk job that I thought it was.
Yeah, I think the parallel to journalism is a really interesting one where you're talking about everything gearing to the short term when long form kind of what I'd call evergreen pieces where you could come back to them years down the line and be like, that's still valuable and I could still uh get smarter having read it. Like that just doesn't exist in the BuzzFeed world today. And when I think about investing and one of the evolutions I've seen, and I think it's especially acute since the COVID period, and I see it from peers I didn't necessarily expect it to. Sorry, y'all, if you're listening, but definitely have seen it more and more. And I see it in myself. So this is in part a reflection in the mirror. It's hard to look at a stock now without people saying, like, are estimates too high or too low? And do I have an opinion? Can I have a strong opinion on whether that's the case? And it's been wild to me in cases where, like, you could kind of, unofficially survey the consensus and be like, everyone knows estimates are too high here. And yet, when the company inevitably walks expectations lower, the stock still goes down anyway because they're like, oh, like, well, I'm just waiting for estimates to have a path to go up again. And there's become this kind of like circular game between how companies guide, where analysts put their estimates, and how investors are going around it, positioning in a given stock. And I don't know what gets us out of this environment. I mean, with journalism, it just keeps going down the hole. But at the end of the day, companies have real value. They have real worth. And whether it be a strategics like, I don't care about the estimates here. I know what this can do to my bottom line, and I know what my cost of capital is, and I know what returns I could get on this. You take it out in that case. We haven't had much M&A the last few years. I think that's been part of what's rewarded this estimate. I don't know, what would you call it? A circle jerk of sorts. Sorry for the bad language there. Maybe if M&A comes back, you start getting value as the North Star again. But I think it's been very weird. And then you look at stuff like um, expert networks, something like the expert networks that aggregate transcripts. They've become table stakes of sorts, and everyone's getting the same exact transcript. So how do you take information that everyone knows and create a unique edge off of it? That seems exceedingly difficult. And so I think it's always been this case that in value investing circles, even people who moved beyond rudimentary metrics of value, time frame arbitrage has been one of the bigger sources. But I'm really intrigued by what you've said about, getting into the field, getting out there, talking to people. And I'd be curious to hear, when you're doing this, are you using tools uh, available to investors to get to the right people, or are you using some of the skills you honed for years as a journalist in order to build your own network of sources and get out there and attack it from that angle?
It's super fluid. I think like the the word you use, which I think is interesting, is are you getting to the right people? And I struggle with like who is the right person? Is the right person the CFO or the CEO? Is the right person maybe a frontline worker? Is the right person a customer? Is the right person a board member or someone who's been invested in the company for a long time? So I kind of take an approach of like a little bit shooting from the hip, frankly. It's like if someone will talk to me, whether it's the CFO, like I was at John Deere a couple of weeks ago, and they invited us in, and we met with the CFO and the CTO. It's a position that we own, and I'm quite optimistic about it. But we also speak with former execs through our relationship with In Practice, which is an expert network that you mentioned. But we also speak with farmers. So I just kind of leaned on some personal contacts and just started making some phone calls. And I think that one of the skills that you get as a journalist is a fairly thick skin to people just not returning your phone calls, or just hanging up on you. And I guess I'm maybe somewhat willing to just put myself out there and just make a bunch of calls to people who don't return my call. But sometimes you just get some really interesting color from a customer of a business. I mean, John Deere's a great example because farmers are, for whatever sort of cultural image they have, they are actually extremely savvy, smart business people. Farmers do not tolerate BS. They have like 40 seasons in their lifetime, and each August is extremely important to them, and they will tell you like it is. And so I found a lot of value in thinking about this question of who the right person is. If everyone's listening to the same earnings call and listening to the same expert networks, then I think that the value that we can provide as just investors is taking a little bit of a differentiated approach. I'm not even above like just reading Glassdoor transcripts, or not transcripts, but reviews of companies, or going on like deep Reddit threads of people talking about the companies that they work for. I think that one of my just observations about investing is like company culture is a very strong determinant of long-term success. And company culture is also notoriously, frankly, impossible to model. You can't really put it on a spreadsheet. Just something that you have to kind of pick up almost by osmosis from talking to people. And so when I think about like how to do shoe leather in-person investigative research, again, it just goes back to more is more. Just have conversations with people. I think that one of the kind of surprising things to me as a reporter turned investor was when I became an investor, there were all these like really fancy tools and data sets that people were willing to sell us and wanting to sell us, and access, to the C-suite at, fancy conferences. And as a reporter, I was always thinking like, well, you can get much like a better story from just people on the ground, just talking to people. So like I'll go to just random trade shows, just talk to employees about, and again, this is not like obviously I'm very familiar with the compliance process, and everything is completely, just personal opinions. And this isn't about gathering intel that's material and non-public. It's kind of the opposite. It's really just gathering information from a differentiated source, that I think is really valuable if you spend enough time doing it. And going back to the discussion on AI, I think increasingly I'm finding value in doing this work because everything else is pretty commoditized. So, it used to be sort of a badge of respect if you had like a team of analysts, just crunching out different research reports, whether it's qualitative or quantitative. But I mean, we use OpenAI's deep research function, and it is incredibly powerful. And so when that work becomes like commoditized, then it just frees up my time to kind of do the work that I think has potentially higher leverage, which is just around talking to people, trying to synthesize that information in my own my own head, which is basically an LLM, and trying to really distill down what is the most important piece of information from all of this that I've gathered, and then how do I factor weight that when thinking about making a decision. So yeah, I mean, I think I do think that there's a lot of parallels. I think it's surprising to me that that there isn't more focus on just kind of in-person primary research in active management. And I think maybe that's going to change, especially as active investors really try to understand their value proposition to their investors, and how to communicate that value. So just a thought. And again, this is all within the last couple of years that I think this has become so relevant. So it's all moving very quickly.
I think it makes sense. Before COVID, it was pretty common to go to trade shows and whatnot. And then with COVID, we were all home for so long, and these things weren't happening to the same degree that you start relying on different tools, and you move away from what formerly had been. And I think about your point on, some companies could automate certain functions away from people. And I'd spoken to a company recently who has an instrument that they said they theoretically could service with technology, purely technology connected to the cloud. And, they could push through whatever service parameters they need for the most part. But they said they love having a service team because the service team is their first source for product development, and it's their first source for sales. That when you have a really well-trained service team who's the customers really respect and appreciate, they're willing to give you really valuable information that you could then hand off to your product dev team, and they're willing to listen to you on what you're building and where your product's going, so they're prepared for the next generation. And you obviously can't have that in a world that's fully automated. So I think your points are strong.
I was in London last week with my wife, and I was there for a few reasons. One of the reasons I was there is as I think both I'm working on this longer term project around resiliency in business, and specifically going around to some of the world's oldest businesses and trying to understand what enabled them to last for so long. So London is a great place to go because there's businesses that have been in existence for 300, 400, 500 years. And to your point, Elliot, I would go into these different shops. So there was a hat shop that I went into that was started in the late 1600s, a wine shop. And I would just ask the people there, hey, super interesting that you guys have been in existence for so long. What do you think has enabled this company to last for so long? And almost uniformly, I'd say this was from 4 or 5 different shops that I went into. They all said the same thing, which is it's our relationship with our customers. It's our customer service. It's the quality relationships that we have with our customers. It's our approach to just working with them, and from generation to generation, it's that relationship with customers. And that hit me like pretty hard. I thought about our own business in that lens. I thought about the companies that we invest in. And in a world that's moving very, very quickly, I think focusing on some of these ideas that just haven't changed, which is customer service will always be important if you want to survive for the long term. And to me, that was really brought to life in just having some really frankly anecdotal conversations. We didn't talk about cash flow. We didn't talk about the finances of the business. But I think that that's kind of a moot point in some ways. I think when you're having a discussion around a business that has lasted for 600 years, in some cases in Japan, where I'll be going later this year or next year, there's businesses that have been around for 1,500 years. So there's always going to be massive shifts in technology, in government, in politics, in consumer behavior. But I think this like inherent fixation on how is my relationship with my customers, that like will forever provide value. So it was very, I thought, illuminating for me and instructive for really thinking about not just this period of AI, but just business generally, is that won't ever change. And businesses that treat their customers well and make their customers feel valued, I think will exit this period a lot stronger than businesses that look to maybe cut costs or maybe cut corners, and risk that relationship with their customers by potentially using AI where they shouldn't.
And it sounds like it has to be a cultural issue because to last that long, it can't be a particular management team or even a particular set of customers. So it has to be ingrained somewhere in a company's DNA to focus on the customer that intently.
Yeah, it's for sure a cultural emphasis, and I think that's exactly right. It's not every company, frankly, should be in existence for hundreds of years. I think companies should go fall by the wayside if there isn't if they aren't providing kind of that value to their customers. So I think that from what I'm seeing and just like the importance of culture, again, I think is just an underrated and maybe underutilized lens through which we can think about investing and just business generally.
You had a great piece in Big Think on some of these Japanese businesses that have been around for so long, the Shinise, and what they've, how they have managed to survive and stay relevant and thrive for so long. You made a few points beyond the customer focus. Maybe tell us a little bit about those additional points from that essay.
Yeah, there's one point that really stuck out to me, which is I was researching this one hotel that has been around for about 1,500 years, and it's now in the 46th generation of ownership, and it's not the same family line, but it's well, actually, as a side note, Japan has the highest rate of adult adoption because these Shinise want to be family owned, but of course, certain families won't produce heirs, and so they adopt a manager into the family to own the next generation of the business, which I just thought was a fascinating cultural anecdote. But one of the observations that I read about was this 46th generation caretaker. Described himself as not the owner of the business, but rather just its caretaker. And I thought that was like a very unique way of framing an individual's relationship with the business itself. That this business is almost like a tradition, and that the people operating it aren't there to extract value from it or necessarily even to create some specific product or service, but to really be its caretaker and to ensure that it exists for the next generation. That was like, for my very Western mindset, like a very unique concept that I think that whether we admit it or not, we all sort of have a little bit of the, Milton Friedman idea that, businesses exist to maximize value for shareholders, or at least some sort of sense that businesses exist to produce value to customers, to employees, to its owners. Um, but this was like actually completely different. And I thought that that was like, for me, somewhat eye opening. And I thought very, uh, kind of, I just truly respected it. I just thought that it was like a fascinating idea, and something that maybe we can all think about a little bit when it comes to our own lives, businesses. And when we're looking at companies, the other observation from my research is that the companies that have been around for so long, especially in Japan, Kikkoman is the another example that I like, which it's the soy sauce company. It's been around since, I think, 1600s. I can't remember exactly, but one of the facts that I learned was a vast majority of the employees at these companies stay for their entire careers, 30, 40 years. And you contrast that with the Western workforce, where turnover is at all-time highs. So employee turnover is just like at incredible, all-time highs right now. I don't know what the average is, something like 3 or 4 years for American companies. And what does that do to the resiliency of a company? I think if you've ever stayed at a hotel, you know that you treat the room maybe slightly differently than you would if you were staying at your friend's house. And I think a little bit of a similar mindset happens at these old companies that exist for so long and employees stay for so long, is they really treat the company like it's their home, and they have a deep respect for the company itself, the products, the services, the relationship with customers. I think now intuitively we know that if you're leaving a company and you know you're going to leave after 2, 3 years, are you really going to invest your time and effort and put in the extra mile to make sure that the product is as good as it can be, that your relationship with the customers is as good as it can be? So again, this is just like a different mental model or filter for how I think about looking at companies. And it's not just, are the operators caretakers for this business, but the employees, how do they feel about the business in relation to themselves and their longevity at the company? If you look at some of like the most successful companies in the last 30 years, they are incredibly high turnover, really difficult work environments. And there's been an incredible amount of value that has accrued to these companies in the short term. I think the open question is, like, how resilient over the long term are these companies? If it's a culture that's based on just constant, pushing 80, 100-hour weeks, and turnover is high, I think you can accomplish a lot in the short term. My concern, and just sort of an open question, is like, can they exist for the next 50 years or 100 years? And maybe it doesn't really matter if you're just investing in and out of stocks. But if you're a pension fund or you're a true long-term owner of an asset, I think it actually does matter quite a bit. And there's a lot of talk right now on just the attribution and the concentration in indices like the S&P 500. I think, to me, what's most interesting is, like, you look at just the top companies, whether it's Nvidia or Apple, Google, Amazon, like, all incredible companies for a variety of reasons. Will they exist in 100 years? I have no idea, and I think about this a lot. And I won't be around in 100 years, but maybe my grandkids will. Um, and and so I just, I think about this, and just like, if you're a really long term investor, uh, what do you really want to prioritize in the companies that you own? And so for me, it's increasingly becoming, um, are the operators there? Do they view themselves as caretakers? And what kind of culture is at this company? Is it a culture where the employees really want to stay for the long term, or is it just kind of a stepping stone? So I'll pause there. I know I said a lot, but this is obviously something that's top of mind for me, and I'm geeking out on it. So interject, please.
Well, yeah, I got to ask you a question because it's something I was thinking about recently. Can you even have a culture if it's just a revolving door of employees?
I think that maybe the question kind of answers itself, right? Like that is the culture. And I think from what I've seen is the companies that have been able to institute a culture of, there's a few elements that I've noticed. One is a culture where employee education is really prioritized, is really important for longevity. So companies that incentivize learning within the company just seem to do better over time. Another more intangible element that I've observed is companies that seem to just have more fun. Fun is a really weird concept to try to study because it's super subjective, and you can't really model it out. It's hard to even ask people about it. But from a lot of the anecdotes that I've seen and talked to people about, people that enjoy their time at work will just have a longer horizon at a company, and the companies seem to do better over the long term. I think that there's like a mentality in Western culture. Okay, let's have fun. Let's do a happy hour. Let's do once a year we'll have a Christmas party. I think that that's like I don't know, a little bit of a short term approach. So I'm always curious, like when I go look at a company or spend time with employees, are they enjoying themselves? I think that there's a lot of evidence, just psychologically and scientific evidence, that if you're enjoying something, if you're in the flow, you're able to compete at really kind of a top tier level. Your output's going to be just incredibly high if you're enjoying it. And conversely, if you're kind of miserable and you're not having fun, then the output's not going to be strong. I think that the counter argument to this is something like, you look at a company like SpaceX or companies that have like achieved incredible outcomes for just all stakeholders. It probably isn't super fun to work in these organizations, right? They're incredibly hard. The mission is super high, and just the culture is kind of cutthroat. So I think that we have to distinguish between a culture that can create a lot of value in the short term versus a culture that can sustain itself for the long term. Very often at odds, I've found and I think that's an interesting kind of tension, which is if you want to create something like really amazing in the short term and break incredible boundaries of what maybe someone thought was possible, then sort of this like slow approach and having fun and having a culture of like slow learning isn't necessarily the best modality of a culture. But I think if you're interested in longevity and resilience, then they're more important. So yeah, it's a great question, Elliot. I don't have a great answer for you yet. I'm still kind of asking these questions as I'm going around.
And kind of relatedly on longevity, I guess I know it's probably hard to answer, but like, do you think the companies that exhibit incredible longevity have a greater capacity than others to reinvent themselves when dealing with adversity, or that they lean into certain core values and have a degree of continuity and persistence through adversity?
Yeah, that's a good question. I so if you live long enough, you will inevitably face some sort of existential crisis. And from what I've seen, it's kind of, I think it's the Andy Grove line, never let a good crisis go to waste. And I could be totally butchering who said that. So apologies. But I've observed that the resiliency of these companies is almost directly related to how they weathered crisis. So to use a non-business example that I think might be illustrative, London in 1666 had just an incredible fire that just wiped out a huge percentage of the city. It burned for several days. I don't remember the exact percentage, but thousands of buildings and homes were burned up, and it was one of the most fundamental crises the city has ever faced. And I thought, it was something interesting for me to study because, okay, well, London's been around for a very long time. It's one of the oldest cities in the world. And to this day, it's a cultural epicenter. It's one of the biggest cities in the world. It clearly didn't just survive that crisis; it came out a lot stronger. So what happened? So I spoke with some architectural historians, and did some digging and found that actually in the aftermath of the fire, there was a lot of tension on how to rebuild the city, and so this one architect, Sir Christopher Wren, um, started designing homes with certain new features. So they used coal burning fireplaces instead of wood burning fireplaces, which were theoretically more fire resistant. They started rebuilt city streets with wider streets that were more that had better safety systems, um, and there were a lot of like specific regulations passed about how to build certain facades. So you had to start building with stone instead of wood in some structures, and quite literally, I mean, it's just to me, it's a quite literal manifestation of they emerged from this, and they didn't just rebuild by going back to business as usual. They used it as an opportunity to reinvent. I think in kind of like a fascinating digression to this is how innovation actually happens because of crisis. So in that example, this was relayed to me by this architectural historian named Simon Thurley, who's a really interesting guy who studied the fire for his professional career. And he said that the coal fireplaces, that was a new regulation. So, well, what happened then? So then that really kind of spurred England's coal mining industry. And in order to dig deeper for coal, we saw the invention of the steam engine, which was instrumental in digging deeper for coal. And so from the steam engine, then we had the Industrial Revolution. And obviously, the Industrial Revolution gave birth to pretty much the modern economy. So I think it's like, for me, when you ask, okay, how do companies think about crises? I look at it like, again, going back to that line that I'm sure I'm butchering, it's like looking at a crisis not as necessarily a bad thing, but how can you use that crisis to emerge stronger, emerge with a more innovative approach, and ultimately kind of seize the opportunity. I think that this may sound somewhat esoteric, but if anyone's ever run a business, they know there will inevitably be a crisis. And those crises are very often the best opportunities to make some big fundamental change to reorient the direction of the company so that it can improve its processes, potentially come out with better services or products. And I think like that ultimately, I think that crises are really, really healthy, just in terms of like a Joseph Schumpeter type of creative destruction idea. They're necessary for growth, just like fires in historically in the United States. We had to do controlled burns to enable the next generation of growth, and it's very uncomfortable to go through these moments of crisis. But ultimately, if you're interested in resiliency, they're kind of the other side of the coin. I mean, they're necessary events in order to enable that longevity.
And Eric, another article I found fascinating of yours on Big Think was about the Swedish experience in soccer as well as business. And I think that ties in a little bit with kind of that management style and the approach that makes employees feel like they're part of a team and working together on something. Maybe talk just a little bit about that as well.
Yeah, this was something actually my editor at Big Think sent me this academic paper by two business school professors, and it was about this what these professors called the Swedish pragmatics, which was a pragmatic approach to business. And I thought that it was like a pretty sort of unique concept, which was a lot of, I'd say, sort of Western culture is very demanding and non-collaborative. It's very top-down structure. There's a hierarchy of of a C-suite kind of commanding the company from top down what to do. But there's these business school professors studied Swedish businesses and saw part of the reason that they were so successful was a totally different approach to doing business, which was like it sounds almost like kind of naive and a little goofy, but like a much more team-oriented approach that collaboration and working together could create more successful long-term positive outcomes for the company. So I think that's just another kind of idea that's maybe not super commonplace, but looking at organizations and company culture where the role of all players within a team are equally valuable, as opposed to a culture where the CEO is the most important person. These are hard to find. I think you find them more often than not in smaller businesses and medium-sized businesses. And I think once you get to the public company size, the importance of the C-suite gets really kind of outsized. But if you're looking just kind of organizational dynamics and company culture, having a culture where the frontline employees are just as valued as whoever's in the corner office is incredibly important to long-term resiliency. So it's just another piece of research that I've picked up along the way that is informing how I'm thinking about just looking at companies and thinking about what companies may succeed over the long term.
Fascinating. Do you want to tell us a bit more about the project you're working on and what the end result will be? I don't know how much I'm allowed to disclose, but I'd love to hear a little bit more about it.
Yeah, I'll scoop myself here. No, I'm working on I'm calling it a project. It's going to be a book that I'm working on. I don't really have too many details yet to share about when it will be published or who it will be published with, but it's an ongoing project. And part of why I'm doing it is there's parts of being a reporter that I miss. I don't miss the deadlines, and I don't miss actually the writing, because I think writing, I've always said I've enjoyed having written. I don't really love the process of writing. The part of journalism I always loved was just the reporting and the research. So it's kind of an opportunity for me to satisfy an itch from 10 years ago that I stopped doing, which was just going around researching, reporting, and I think for me it's fun because it's very relevant to the work that I do with Nightview and just as an investor, which is how to invest in companies for the long term, how to invest in companies that will be successful. So yeah, I'm going to a bunch of different countries. I'm speaking with dozens of family-owned businesses that have been around for hundreds of years. There's not too many in the United States, as you can imagine. A lot of the companies I'm talking to are older than the United States. So my work is bringing me to London last week and to Asia and across Eastern and Western Europe, maybe South America. And I think it's just this big investigative reporting project that it will express itself as a book at some point, but no idea when that will happen.
Well, we definitely look forward to it. Elliot, I don't know if you want to jump in with any last remarks or questions for Eric, but this has been absolutely terrific. Thank you so much, Eric. We've enjoyed it very much. And also thanks to all of our listeners. And
awesome. Well, thank you guys.
Yeah. Great. Well,
great to have you, Eric. Thank you so much.
Yep.
Thank you.
Bye for now.
Thank you for listening to This Week in Intelligent Investing, brought to you exclusively by MOI Global, the research-driven membership organization. Learn more at moiglobal.com.